Hello, hello, and welcome to the DXY update. First time on this channel. Interesting developments today. Obviously, we had the CPI data release. Inflation came in slightly lower than the market actually had expected. It actually did lead to a decline here on the DXY. I mean, you can never really say, this leads to that or whatever, but we have usually some volatility on these days. And the trend is down at the moment. That's the idea, and it's been the idea for some time. So the overall trend, my interpretation is that we obviously topped here in a larger third wave in September 22. We have our 5-wave move to the downside into the February lows. I mean, we can debate whether that A-wave low is better placed here in February 2023 or here in July 23. It doesn't make a great difference. No, it doesn't make a great difference. And at the moment, this count works, but you can also see that really from the February lows, I mean, we've only really been moving sideways. And my idea has been for some time that we've actually formed obviously this A-wave low where the price bottomed in February 23. And then we formed this B-wave top where we had a local top in October 2023. And we're now in this larger C wave to the downside that can take us into the low $90 region. In this interpretation, we have wave 1 to the downside, wave 2 to the upside complete of wave C. Problems with this structure. This move down is likely an ending diagonal. So I'm talking about the larger C wave. It's likely an ending diagonal, which means we have to be ready for a choppy price action. The move to the upside here in wave 2, while it didn't invalidate the C wave to the downside, it moved up a little bit too high. But again, that would possibly add to that idea, add some credibility to the idea of a diagonal to the downside. Then we explored initially, maybe this is another one too set up to the downside. So just to confirm we're heading down, but also here it moved a little bit too high to be reliable, not too high to be valid. That slight break of resistance, again, it's not a sustained break and no invalidation, but it just all adds to that idea that we might be dealing with a diagonal. At best, I mean, diagonal means, yeah, we can head lower, but it's not that clearly bearish as, for example, an impulse would be. So it will make it a bit more difficult. We have to expect those choppy price movements and maybe, sort of corrective rallies that are a little larger than expected and so on. But it takes a break above the green lines here, especially the upper one at $107.35, to indicate that something different is going on. So the white count is still my main thesis, so that we're basically heading down in wave C and into towards that low $90 region. And as long as we stay especially below the October low, but ideally below the April low, and ideally below the June low, which was now printed at $106.20, the focus is down. Today we've seen some downside momentum, so it really could be the case that now this C wave to the downside is unfolding. In the last update, I shared with you that my interpretation is, my interpretation is this is an A wave down, a B wave rally that topped in June, and we could have started wave C. Now for the wave C, this is an ideal target area between $103.62 and $102.11. where the C wave could easily just react to the 100% extension or one of these lower fibs. And then at some point a B wave rally should start. That would also keep us in this range for a while, most likely. And then a C wave down, and ideally we go down slowly. But it will, it seems to be not an easy ride. But yeah, that red candle could really indicate we have finally topped in the B wave. I mean, it's following the plan, but it's just extremely slow. And all the levels should be clear. So I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe, and have a great day. Thank you very much. Bye-bye.